What's up, YouTube? My name is Ty, financial advisor. Welcome to my channel. Please like the video, please subscribe, and catch me every weekday after market close on the Smarter Gambling Show. So here is EVFM, Evofem Biosciences. This finishes at 88 cents today. That is down 17.94%.
And it's gone.
So we covered this stock a few times in the past few weeks. This stock and a few other contraceptive stocks did initially squeeze due to the overturning of Roe v. Wade, because the market was speculating that people were going to start buying more contraceptives because they no longer have access to certain services anymore. And ever since then, the squeeze has been winding down slowly. And today, there's a reason as to why this pulled back so much. We did have some news here. So let's check that out. Morgan Stanley maintains underweight on Evofem Biosciences, lowers price target to 75 cents. And that is down from $2. So a major downgrade there. And it appears like they and probably a few other institutions are pulling their money from this stock. So pretty bearish news there. But this did make top 10 on StockTwits once again. Had about 2,000 mentions. So once again, we're going to analyze it. All right, let's jump right in. Let's go ahead and analyze here. So first of all, this appears to be a cup and handle in the making. Bottom of the cup being the low of 27.5 cents. And there can be multiple possible tops. It can be 165, 260, 350, 455, 555, 620, or $8. And longer term, this is part of an even bigger cup and handle, where this does have the potential to go all the way back up to 112. Although I do think the most realistic top would be 260. But those are all bullish indicators. That is telling us that the stock should come back up to one of those tops to complete the cup. And then we have a triple gap down. First gap down is back here at 975. So that's a bullish indicator. That is telling us that the stock should come back up to 975 to fill this gap. Second gap down is back at 240, so another bullish indicator. That is telling us that the stock should come back up to 240 to fill this gap. And third gap down is back at 165, so another bullish indicator. That is telling us that the stock should come back up to 165 to fill this gap. So the 165 and 240 gaps may fill in the short term, and the 975 gap should fill in the longer term. But yeah, triple gap down, extremely bullish. And now for the bearish stuff. So we have a gap up at 50 cents. So that's a bearish indicator. That is telling us that the stock should come back down to 50 cents to fill this gap. And that should happen in the short term. And we do have a descending triangle forming here. Right now, this is consolidating between about 115 and 30 cents. So there's a bit more consolidation to go. But this should consolidate somewhere around 70 cents. And from there, it should break out to the downside. So descending triangle, bearish indicator. And down here on the MACD, the moving average convergence divergence, the MACD line has not crossed the signal line just yet, but it looks like it's about to very soon. So that is a bearish indicator. That is suggesting that it may be time to sell. And here in the aftermarket, this is pulling back down to 85 cents. So if this aftermarket action holds, that would be a bearish indicator for Monday. That is suggesting that this stock will sell off on Monday as well. And if you guys want to follow along, the link to the chart is in the description down below. So right now, this is trading between the sideways channel, the rectangle of 92 cents and 80 cents. So if this goes to the upside, next levels of resistance would be 92 cents, $1, 115, 135, 150, 165, 225, 240, 260, 275, 285, $3, 320, 330, 350, 360, 385, 405, 425, 440, 455, and then 510. There is resistance above 510, but we're not going to discuss that right now. And if this goes to the downside, next levels of support would be 80 cents, 50 cents, 40 cents, 36 cents, and then the low of 28 cents. So right now at the current price, 88 cents. The channels to the upside and the downside are pretty decently sized, so expect a regular amount of price action either way this goes. However, if/when this breaks 165 to the upside, the channels start to open up and get really wide, so expect a significant increase in price action if/when this breaks 165 up until this hits 225. So from 165 up to 225, expect big price action, and then past 225, expect regular price action again. And then to the downside, if/when this breaks 80 cents, the channels start to open up and get really wide. So expect significant price action if this breaks 80 cents up until 50 cents. So from 80 cents down to 50 cents, expect big price action, and then below 50 cents, expect regular price action again. RSI is currently at 48, so that is very average. So according to the RSI, the current price of 88 cents is around fair market value. Maybe it should be a little bit higher. And this did 34 million in volume today, which is way above the average of 5.5 million. So the sell-off today was confirmed by the volume, but this is significantly less volume than the previous trading sessions, so it does appear like the squeeze is winding down and coming to an end. Okay guys, just my opinion, not financial advice. So longer term, the stock looks really bullish. Again, we have some strong bullish indicators in the cup and handle and triple gap down. But in the short term, we are getting a lot of bearish indicators, and it does appear like there is a lot more downside to go. I did predict in the last video that this would pull back down to 50 cents to fill the gap, and a lot of apes were not happy about that, but I stand by that. So therefore, if you want to go long, not financial advice, the current price of 88 cents is a pretty decent entry, very average entry here. So I guess if you're holding for the long term, it's not such a bad play to enter here. But again, we are getting a lot of bearish indicators in the short term. This is still pulling back from the squeeze, and I do believe this will come back down to 50 cents to fill the gap. So while 88 cents isn't a bad entry, if you hold off for a little bit here and you're a little patient, you should be able to get this back at 50 cents where the gap is. And I think that would be an excellent entry. And again, in the longer term, this should eventually come back up to 9.75 to fill the gap there. So from 50 cents, that would be an 1,850% upside potential. So huge upside potential if you enter at 50 cents and hold for the long term. So I would say going long at 50 cents would be a low risk, extremely high reward play. Definitely worth a shot, in my opinion. Can't go too wrong there. Now, if you want to go short, not financial advice, it's a pretty decent play at the moment. Not the greatest, but not terrible. It's a pretty average entry on the short side as well. Again, this should come back down to 50 cents to fill the gap. So from the current price, 88 cents, down to 50 cents, that would be about a 45% downside potential. Pretty big downside here. The only thing is, this could potentially keep running to the upside as well. Not likely, but this is a retail favorite now, so anything is possible. I would say at most this comes back up to 165 to fill the gap there in the short term. So from the current price, 88 cents, up to 165, that would be about a 90% upside potential. So I would say going short at the current price, 88 cents, would be a high risk, high reward play. It is somewhat risky, but as long as you're able to withstand some upside pressure here, you should be able to make 45% to the downside. So I can't support going short at the current price and higher, and I would say cover at 50 cents where the gap is. And you should be able to make about 45% to the downside there. But yeah, pretty straightforward, guys. Very bearish news today with Morgan Stanley downgrading the stock to 75 cents. Looks like a lot of institutional money getting pulled here today, and the squeeze is winding down, coming to an end. So long term, looks really bullish still, but in the short term, I do believe there's a bit more downside to go. So if you want to go long, the current price, 88 cents, not a bad entry, but this should pull back quite a bit more, and you should be able to get this back at 50 cents where the gap is, and I think that'd be an excellent entry. Long term, that should pay off really big. And if you want to go short, very average entry at the moment at 88 cents. High risk, high reward. Again, I would cover at 50 cents, and you should be able to make 45% to the downside here, as long as you're able to withstand some upside pressure. So sorry to everyone who lost money in stock today, and good luck to everyone currently in the stock and to everyone looking to take a position. This is EVFM, Evofem Biosciences. Thanks everyone for watching today. I appreciate you guys. Please like the video, please subscribe, and catch me every weekday after market close on the Smarter Gambling Show. You apes already know, diamond hands to the moon. I'm Ty. This is Smarter Gambling. See you guys on Monday. Have a great weekend, everybody. Peace out.